So one of my YouTube subscribers asked me, Rohit, can you discuss Piramal Pharma? So in this video, I'm going to discuss this stock. And from now onwards, I want to look at the questions that all of you are asking. And specifically, if I take a particular question, I would like to make videos to specifically answer individual questions. So if you have any questions, just send them to me. I will keep a record of those questions. And at some point or the other, I will make a video to answer your question. Okay. So let's discuss Piramal Pharma. Now, as you know, whenever I look at a stock, I do comparative analysis, technical analysis, fundamental analysis, liquidity analysis, and market analysis. All of this in less than 10 seconds. How can I do that? Because I know exactly what to look for. I have already predefined my criteria. If I don't predefine my criteria, I will be confused when I am looking at a particular stock. So, in a fraction of a second, I could reject a stock. So, for example, if the technical criteria doesn't get met, I don't need to do fundamental, comparative, liquidity, and market analysis. If the technically itself the stock is not set up, why should I waste my time doing other kinds of analysis? So that is why sometimes I am able to reject stocks in fractions of seconds because I know exactly what I am looking for. Unless the stock meets my criteria, I am not going to get in. Okay. Which also means that I am allowing the stock to come to me. I am not the one who is chasing the stock. I am allowing the stock to come to me. This is my approach towards the market. I will define my criteria for myself. And if a stock meets that strict criteria, I will take a trade. Otherwise, I am happy to sit on cash. I am happy to relax. Nobody is forcing me to put my money into the market, right? That is my approach. So I will not uh, compromise my values for the market. The market will always try to entice me to buy a stock. But no, I hold the bargaining power. I will have always have the bargaining power because I am the one who has defined specific rules for myself and the stock has to come to me. I am not going to chase the stock. So that's a little, lecture on my approach. But let's look at Piramal Pharma. So as usual, let's go to Market Smith. And you can see I have not even looked at the stock. Okay, this is the first time I'm looking at the stock. So let's write Piramal Pharma. You can see this red flag. So that's it. In less than 1 second, I am rejecting the stock. Any stock which has a red flag, okay, I don't even look at anything else. I don't even look at technicals. What technicals, what comparatives, what fundamentals? The stock itself has a red flag. If I click here, see, it is under the NSE additional surveillance measure. Now, I will not go into the details of this, but the stock is under surveillance from the exchange. So that's a red flag, right? I'm not interested in the stock because there are more than 5,000 stocks in the Indian stock market. Why should I look at a stock which has a red flag on it? Okay. In less than 1 second, I have rejected the stock. I'm not even looking at this is what practically I'm doing, by the way. Okay. But for the sake of the video and for the sake of your understanding, I am explaining the comparative, technical, fundamental, liquidity, and market analysis in this video. So I will take the time to guide you through what I am looking at. So when it comes to comparative analysis, I am looking at price strength. This number should be preferably be more than 80. Accumulation distribution rating, which is institutional demand or buyer demand, that should be A or B, which is fine. Group rank should preferably be less than 40. If it is less than 100, it is fine, but then the industry group rank should be improving. How do I check that? Well, this is medical diversified industry group. So if you go to that industry group, so go to medical diversified. So this is by alphabetical order. Medical diversified here. Medical diversified 93 stocks 51. So 6 months ago, the rank was 97. Now it is 51. So industry strength is improving. Okay, is very important. Another point I check uh, in comparatives is the leadership. So I go click here. I go to stocks here and I check where is Piramal Pharma in as per market capitalization. So Piramal Pharma not even comes in the top five. So Piramal Pharma is not a market leader in the industry. I prefer the top three or top five. Well, ideally, we should not be considering a stock as a market leader based on market capitalization. Market leadership comes from five factors: sales growth, EPS growth, ROE, margin, and price relative strength. Okay, if a stock is coming consistently in the top three, in these five parameters within the industry group, that's a leader. And that stock may or may not have market capitalization in the top three or five. Now, that's a very cumbersome analysis that will take you a lot of time because you will need the EPS growth of all the companies. You will need the sales growth of all the companies. You will need the price relative strength of all the companies. All of that in a single sheet to determine what stock is a leader. And that data is not available here on MarketSmith. You will have to look at it individually. That is why, to simplify my analysis, I look at the top three or five in terms of market capitalization. If I really like the setup, if I really like the technical setup, the comparatives, the fundamentals, then I will dig in deeper. Okay. But here the stock itself has a red flag. So why should I dig deeper? Okay. I would not even spend half a second on the stock because it doesn't meet my criteria. See, please understand, I am not rejecting the company. I am not saying the company is bad or the stock might not double from here. No, I am not saying that. I am just saying that the stock doesn't fit my criteria. It might fit someone else's criteria. Let's say you are a value investor or you are a swing trader or you are doing intraday. The stock might meet your criteria. So go ahead and take action on your analysis. It doesn't meet my criteria. Okay, that is why I am saying please buy a small diary. Okay, maintain a small diary. In that diary, there should be 5 pages: comparative, technical, fundamental, liquidity, and market analysis. In those 5 pages, you write down the criteria. When I'm making a video, please take notes. Write down the criteria. Okay. In the first 1 or 2 months, you might need that diary, but over a period of time, everything will be here. You don't have to always refer back to the diary. You will know what to look for. I don't have a diary right now. Okay, I just know what to look for. It's as simple as that. So I just looked at 5 things: relative strength, buyer rating, industry group rank, industry strength, and industry leadership of the stock within the industry group. I just looked at 5 things. It's very logical for me. I don't need a diary for that. Okay. Next, comparative done. Now let's look at technical. Okay. Have a look at the chart here. The stock is falling. The 50-day moving average is above the 150-day and the 150-day is above the 200-day simple moving average. So the stock is in a stage 2 uptrend. But look where the price has closed. The price has closed below the 50-day simple moving average, right? Any stock that closes below the 50-day simple moving average is not fit for a positional trade. Forget about swing trade. Okay, is not even fit for a positional trade. And there is no base. There is absolutely no base. For a base, you need minimum 10 candles in the base and you need minimum 4 points in the base. Okay. What about the stage in which it is? It is in a confirmed stage 2 uptrend and the base number is 3. So it's somewhere in the middle. Okay. In its journey. But the stock seems to be breaking the low of the base number 3. So you might see base number 1 developing. By that time, if the red flag is taken out, then we will look at the stock. So currently, I am not interested in the stock. See, in this video, we are going to explore 2 questions. Number one, should I buy the stock? Okay, based on what I am looking at, it doesn't fit my criteria. I'm not going to buy the stock. The second question we have to explore is, let's say I already own the stock. If let's say I bought the stock somewhere here. Now, given the current price action, should I be holding on to the stock? My answer to that question is, if I had bought somewhere here and when I see the stock breaking the 50-day simple moving average, that's a big red flag for me, right? Ideally, a strong stage 2 uptrending stock should not break the 50-day simple moving average, especially on volume. See, the volume was more than average on this day, and it has closed below the 50-day simple moving average. It has remained below that for around 4 to 5 days. That is not a good sign. Plus, the relative strength line is falling, right? There could be reasons for this. Our sales growth requirement is minimum 25% latest quarter, or accelerating sales growth for the latest 3 quarters. The fundamentals are very poor. See, from 3 rupees EPS, it has dropped to minus 1.4. So it reported a loss. And then it came back up to positive, okay, 0.14, but it still remains well below 3.13. So for a leader, for a leading stock, the EPS, there should be some positive EPS growth in the past 3 years, which I don't see here. I also don't see the sales criteria being met. Return on equity is 0%, right? What about margins? After tax margin is negative. So this is poor fundamentals. Okay, technically poor, fundamentally poor, comparatively poor. Right? Comparatively, you don't see much strength here. Okay, so comparatively, technically, fundamentally poor. The stock is not showing the characteristics of a leader. So obviously, I'm not going to buy the stock. As far as the question of holding the stock is concerned, if I am a positional trader, obviously anything below 50-day simple moving average, I am out of the stock. If I am a swing trader, I would not even consider, I would have sold this stock much earlier. If I'm a value investor, then the story is different. Then it's not about the chart. A value investor does not look at a chart. The value investor will look at three things: management, business, and valuation. If you understand the business of the company, if you belong to the pharmaceutical industry, if you understand the business, if you understand the management, if you understand the valuation of the company, and if you feel that the market value of the company is currently below or at a significant discount to its intrinsic value, then it makes sense to buy or hold on to the stock. That's a different approach. I am primarily a positional trader, right? So just to answer the two questions, if I were to consider buying this stock, I would not get into it. If I had bought this stock earlier as a positional trade, I would have been out the moment it broke the 50-day simple moving average. So you notice I am absolutely clear as to what I want to see on the chart. And if I don't see that on the chart, I am out. I sit on cash, right? It's very simple. So fundamental analysis poor, technical analysis poor, comparative analysis poor. What about liquidity analysis? Liquidity is fine because it trades like 7 million shares on an average per day, and it's a well-known company. So liquidity is not a problem here. Price is also good, 260 rupees. It's not a penny stock like below 20 rupees or below 10 rupees. So liquidity is fine. And I think it is traded both on National Stock Exchange and Bombay Stock Exchange. I do not put my money in stocks which are only traded on the Bombay Stock Exchange. I want the stock to be trading on the NSE just for liquidity reasons. And I hope this is not a restricted stock, like something like you have to buy some minimum quantity of shares or you can't sell on the same day or things like that. Okay. Those are basic checks that we have to do. Liquidity is fine. What about market conditions? Well, as per Market Smith, see, as per Market Smith, currently the market is in a confirmed uptrend. The question is whether that uptrend is sustainable. I doubt that personally, and I have made a video on this before. Okay. So, in a confirmed uptrend, we are supposed to take positional trades into stocks that are fundamentally strong, but which may or may not be technically strong. But if a stock is not technically strong, at least it should have 10 candles and 4 points. That's the basic requirement. That's a basic non-negotiable requirement that I have right now. Okay. Not right now, always. Okay. So that is my overall discussion on Piramal Pharma. I hope I have answered your question. So I request all of you to ask me questions on the in the comment section so that I can get some video ideas for the future, for the coming week, for the coming weeks, months. I will take your question. I will create a video, and through the video, I will try to impart some valuable trading lessons to you. I think that is an approach which I like to follow. Okay, I want to interact with you. I want to know what is on your mind rather than telling you what is on my mind. Okay. So let's see how that approach works. So I request you to send me feedback, comments, questions. Let us see how it goes. I will try my best to answer all questions. Practically it is not possible, but if I find a question that is extremely important and relevant and which allows me to add a lot of value to you, let's do that. Okay? Thank you so much. Have a nice weekend.